Have you noticed that your savings just don't grow anymore? No matter how much you try to cut back, you're not alone. In 2026, the average American savings rate dropped below 4%, the lowest it's been since the 2008 financial crisis. But here's the truth, it's not because people suddenly got bad with money. It's because we've fallen into a hidden money trap, one that most of us don't even see. So today, let's break down exactly why Americans are saving less and what you can do to escape the trap. Section 1: The illusion of comfort. Let's start with the mindset. Many Americans feel financially stable, even when their savings account says otherwise. Credit cards, buy now, pay later, and subscription lifestyles give the illusion that everything's fine. You might have the latest iPhone, drive a decent car, and eat out twice a week. But here's the catch: most of it's funded on credit, not cash. We've normalized living paycheck to paycheck while telling ourselves it's normal. The average American household now holds over $10,000 in credit card debt, and 46% of Americans say they couldn't cover a $1,000 emergency. That's not comfort. That's quiet financial stress. Section 2: The cost of living crisis. Now, let's talk about the elephant in the room. Everything costs more. Rent is up, groceries are up, insurance is up, even coffee is up. In 2026, the average rent for a one-bedroom apartment in major US cities crossed $2,000 a month. And it's not just inflation, it's lifestyle inflation. When people earn more, they spend more. Even a $100 salary increase disappears fast when your gym, Netflixes, and DoorDash bills all rise at the same time. This constant upward pressure makes saving feel impossible, and that's exactly how the system is designed. Section 3: The hidden trap: easy credit. Here's the real trap. Credit is easier to access than ever. In 2026, AI driven banking allows instant pre approved loans, 0% financing, and buy now, pay later on everything from TVs to sneakers. Sounds convenient, right? But this creates an invisible web of micro debt. You don't realize how deep you're in until the payments start stacking up. And because interest rates have risen, that easy credit now costs way more than it used to. It's like drowning slowly, one monthly payment at a time. Section 4: Emotional toll. Money stress is real. Financial stress isn't just about money, it's emotional. According to recent surveys, 72% of Americans feel anxious about their finances at least once a week. It affects relationships, mental health, even job performance. People are working more hours but feeling less secure. That's not a financial issue, that's a systemic burnout. Section 5: The way out. Small wins matter. So, how do you fight back? You start with small, consistent habits. Automate 5% of your paycheck into savings before you see it. Track every subscription you don't use and cancel one today. If you get a raise, save half of it instead of upgrading your lifestyle. Remember, financial freedom isn't about earning more, it's about keeping more. The system wants you to spend mindlessly. But if you stay intentional, you'll break free from the trap most Americans are stuck in. If this video opened your eyes, smash that like button. It really helps the channel grow. And if you want more breakdowns on what's really happening with American money, hit that subscribe button and turn on notifications.